What's good, guys? So welcome back to the channel. Now in this video we're about to break down these markets as always, but before I go ahead and do that, let me give a quick shout out to all the guys who have joined us over at the Discord since we started the month of February. As a matter of fact, let me show you guys what's gone down this week over at the Discord. All right, so check it out with me. For those over at the Discord in the options with me, we entered into two option plays yesterday. One was puts on ticker symbol DKNG DraftKings. The other was calls on Micron. All right, so check out today. Sold out of both of those. Sold out of Micron for a $2,300 profit, and then sold out of DraftKings for a $1,200 profit. So that brings the total to about $3,500 was sold out in profits. I always get questions from you guys asking what's the percentage. DraftKings was sold out for 100%, and then Micron was sold out for about 60%. Okay, so big wins for the team, the whole team. It was payday for them. If that sounds like something of interest for you guys, if you want to start making money in the markets like that, hop into the Discord. Link is in the description below, and we'll see you guys over there. All right, guys, so in this video I'm going to talk to you about a couple of these plays and the overall market as well, which will just help you guys navigate and help you guys with your strategy as we go over the next couple of sessions. But let's kick things off with some of the biggest headlines in the markets, guys, and what is moving the markets today, and that is Google and their earnings. Right, so if there's anything that you guys take from me from this video, it's what I'm going to say on Google, but then also in a couple of minutes I want to talk to you guys about the growth market as well, right? Because there's basically two worlds in this market and what's going on right now. But Google, phenomenal earnings, guys. That was the best beat I've seen since we've kicked off earnings season, right? Phenomenal performance from Google. And Google is one of my top picks for 2022 and 2023 as well. I know some of you guys are like, I was just saying that because the Google stock's up 10%, but Google is a stock I've been speaking to the Discord about when they're in the 2,500 range, when the market was beaten down, as one of the top dollar cost average stocks, right? That is a phenomenal stock. Now, one thing you guys need to realize about Google stock is the fact that they've got a piece of their business. That's the cloud piece of the business that is fast growing, and they can continue to grow that, continue to scale that. And in doing so, that would make the whole Google enterprise even larger and a better business than they're currently at right now. So it gives them that runway of continual growth. So the cloud piece, I expect that to continue doing well. And when you see those types of businesses that have pieces of them that can continue to grow, if you take NVIDIA, for example, their Omniverse piece of their business, that's like the same as the Google Cloud piece of their business. It's that special piece within their business that has got some fast growth rate and can take them to the next level. As a matter of fact, I expect Google to be a $3 trillion stock by the time we close up 2023, entering into 2024, right? So that's massive gains from where they're at right now. Now, one thing Google's doing is that 20-to-1 stock split. Guys, all this is just optics. It just changes the value of that stock price, okay? The actual amount that you own, as in the dollar value, is going to remain the same, but it just changes the actual stock price number, nothing else. But the good thing about that is it makes Google stock more appealing to investors who didn't want to pick up a $2,700 stock or $2,500 stock. Now, Google's done phenomenally well without a lot of the retail interest. And that's interesting, right? Because even if you're like most of you guys probably don't even own any Google stock. Most retail investors don't own Google stock. A lot of retail investors own Apple stock, for example, because the Apple stock price looks visually more appealing. Now, this is part of the reason why I think the Google valuation is as low as it is. I told you guys before, Google valuation is low. It's one of the lowest in the FANG stocks, and that gives it room to move up from here. That's why I expect them to continue to do well over 2022 and into 2023 as well. Low valuation, fast growth business, firing on all cylinders. So tons to like about the Google stock. And there's talk of them moving into gaming as well. So again, that's just another piece of the business. Google is a goated company, and I expect them to perform well. So this is one for you guys to definitely keep on your radars right now. How do you go about approaching Google stock? That's not to say you should go about and buy it where it's at right now. Yes, we've seen a big jump in that stock price today, But it's one where when you see them trading sideways, when you see them cooling off, it could be an interesting opportunity to add or build or start a position in the stock, right? So Google stock, one of my favorites going through 2022 and into 2023. Now for completeness, let's talk about AMD as well. They released their numbers, good performance all round. We saw a nice jump in that stock price today. Now, I've been talking to you guys about AMD for a long while now. You know what I think about the stock. Phenomenal stock, good long-term performance, good long-term potential as well. And they just showcase that through their numbers, right? The leadership is top notch when it comes to AMD. The same thing we see for NVIDIA as well. So no surprise to see them display high-class results and for the market to go ahead and reward them as they should do, all right? Now with AMD, one of my biggest concerns, and this goes across to the board for all the chip stocks, is the fact that, all right, businesses are pumping right now. They're doing very well. We got that supply chain shortage, which means their chips are very much in demand. They can sell a lot of these chips for like thousands of dollars. What happens though when things normalize, okay? So what happens when there isn't this supply chain crunch? And what happens when demand does slow down to maybe its rightful long-term levels, okay? So that was my biggest concern, but they've gone ahead and kind of cooled off, deflated those concerns, given the fact that they said, look, our guidance numbers are strong for Q1, which is what we're going through right now, and for the year of 2022, okay? So we should expect AMD to have a good year. That being said, I'm still gonna look at good opportunities to trim some profit off the top, because I do think we do get a spike in that stock price. It's a volatile play. It's going to come back down. So why not take a piece off the top when we see it on the run up? PayPal, guys. Now, this is one. Haven't bought into PayPal, but I was telling you guys, I was potentially expecting them to follow the same route as an American Express, a Visa, MasterCard. I was wrong. Stock got obliterated today, down like 25%. Okay, so this again just reinforces the message that you guys must know, and that is, with these stocks that we're buying in the markets, got to make sure that the guidance is strong. So make sure the last time they reported their numbers, they checked all boxes, beat estimates, as well as posted up good guidance. If not, the likelihood is the guidance they're reporting this quarter is going to be weak and the stock price is going to get punished, like we've seen for PayPal. Now, PayPal's a stock where I'm not interested in touching PayPal. I know we got a lot of stock bargain hunters looking for beating down stocks in the market for that strong rebound, but it's one where I'm not going to get involved in for now anyway, all right? Now, in terms of where the market's going, if you guys remember the last video, I said to you, I'm expecting this relief rally, okay? I'm expecting the market to push higher. Now, since then, the market has moved up. The overall market has moved up, driven by a lot of these heavyweight tech companies. And today we've actually seen a pretty interesting technical move on the SPY. We've seen it cross above that 100-day moving average, okay? So I actually expect there to be some still room for the market to move to the upside, driven by some of these technology names like an Apple, like a Microsoft, like a Google, and some of the other names as well. But I want to talk to you guys about the growth market, okay? Because what I'm hearing on the internet, on TV shows, etc., about growth stocks, I just think it's wildly wrong, and just a lot of them don't really know what they're talking about, right? What's happening with the growth stocks right now? I told you guys this is a tale of two worlds. We got high class quality tech companies pumping, doing well, and then we got the growth market, which is like a landfill right now. So it's a war zone, right? It's an absolute war zone. We're seeing red across the board within the growth market today. Guys, it's clear what's going on right now. The first is we've lost a lot of retail in the market. As clear as day, right? There's not as much retail buying pressure. And guess what? The institutions are playing off that well as well. So when we had a lot of retail buying pressure in the markets, the institutions are playing off that, pushing prices higher along with the retail. Now things are moving to the downside. Got a lot of high volatility. Institutions are working to the downside now as well. You got low sentiment, and then you got a massive question mark around the earnings of these growth stocks, okay? So when I'm hearing people out there in the market saying this stock's a great buy right now, but you don't know what the quality of the earnings are gonna be, that's just the complete wrong approach, right? We're going into the growth stock earnings season now. That's kicking off like middle of the month, and you're gonna start to see a lot of these high or used to be high momentum. I don't think you can call them high momentum anymore, right? Used to be momentum stocks delivering their earnings. So this is key because some of these stocks are going to do well, some are going to do bad. Like you've seen PayPal move down 25% today. Well, guess what? That's not the last 25% drop you've seen this earnings season, all right? We saw Netflix drop down 25%. We've seen PayPal drop down. You're going to see some of these growth stocks follow that same route down 10, 15, 20, 25%. Okay, so what you guys really, a clever way to play these markets, right, is if you have a stock of interest, you just hold off and wait for them to deliver their earnings, because then you have more certainty around that big catalyst that can shift that stock price. Okay, so that's the move with the growth stocks with me. Haven't really touched any growth stocks in a while. That's been the right move because they've just been sliding down non-stop, right? I want to see what the quality of earnings are going to be, because yes, some of these massive technology companies that have the resources, they have the history behind them, they have all the tools to navigate a testing time in the markets, are delivering some strong results. But a lot of these growth stocks don't have the same abilities as some of these massive tech companies. So will they be able to weather the current change in dynamics that's going on in the markets? That's a massive question mark, and that's what we're going to see coming up for the middle of the month, right? So that is my strategy. That's the plan that's been working out well for me. So I just wanted to share that with you guys. Now, funnily enough, in the last video, I had a lot of you guys saying, "Thank you, you sound out of breath, you sound out of breath." Hey, guys, I probably just need to do a little bit more cardio if I'm honest with you. I'm working on it. That's all I've got for you in this one. Catch you guys in the next one.